Hey everyone, Mike Machado here from KW Complete Realty in the Hamilton, Burlington area. Today joining me, we got the one and only James Lowen from Lowen Mortgage Group. How you doing, James?
Always good, brother. Thank you for having me.
No, thank you for coming on this call today and doing this video for all the people that are going to be watching it. And today, really, we're just going to have a quick chat and just kind of clear up some of the misconceptions and fears that people are having around the mortgage world and bank funding and all that. And then hopefully you're going to walk us through it.
Sounds like a plan.
Awesome, man. So when I've been reaching out to clients all the time, one of the questions that keeps coming up over and over again is, with interest rates being lower to historical rate right now, is it time to break my current mortgage and get a new one?
Yeah, it's a great question, and we're getting a lot of that. And the answer is it depends, right? So there's no one blanket solution that I can give, across the board, because it depends. Who's the lender you're with right now, what rate you're at right now, the amount of term left owing. What I can tell you is it's really easy for us to calculate and find that out. With most of our lenders we work with, we've got a simple consent form. You sign it in DocuSign. We'll send it by email. Fill in your mortgage information. We'll confirm what's the balance, what's the breakage. We'll run the numbers and find out, is that optimal for you? Because it's not hard math, but it's not always the easiest to find out. Once I add that principal, am I going to be ahead into the future? It is also an opportunity, though, while you're looking at if we are breaking even outside the rate, it's an opportunity to also look and say, I do have a little bit of credit card. I do have a little line of credit. Maybe I've got a car loan, which there's no penalty to pay those off either. And I got a little bit of work to do on the house. Let's roll some of those things in there for cash flow. And, if you're concerned or expecting you might lose your job or already have that, we can also re-amortize. So if you've got, 20 years left on your mortgage, we could re-amortize to 30 just for now. When you go back to your job, we can always increase your payment back up and bring you right back down to 20 years. So there's benefits, even outside of just taking a look at that rate change breakage.
So that's excellent advice. So with things the way they are, with people, starting to really count their pennies, obviously, definitely a time to be looking at refinancing and getting rid of some of that credit card debt. And you also mentioned car loans, which is pretty interesting. I know that's a question I get all the time. Should I roll in my car loan into the refi? And it sounds like you're agreeing to that.
Yeah, again, there's no good answer. What I don't want to see, cars depreciate pretty fast. So if you keep on adding a car onto that, eventually you're going to run out of equity. But what I'm seeing right now, it's good for everyone to know, every car loan is fully open. Okay, there's no cost. And you might think to yourself, well, my car loan though, James, is at 0% interest. Okay, you got 10 grand left on that. Rates are like 3%. That's $300 for a year. But if that's going to free you up $500-$600 of cash flow, it might be very well worth it for you, to be able to afford and move into the future. So we do look at doing that quite a bit. It also can just simplify things, right? When you've got 2-3 Visa cards, you got a loan onto this one, you've got a line of credit over there, you got your mortgage, rolling it all together and having just one and just attacking that mortgage. We call it the KISS theory, right? The keep it simple, stupid, and just having that one. Most people find it really, eases the stress and alleviates the cash flow if that's at all a concern.
Yeah, awesome. I mean, and it sounds like what I hear you saying is, refinancing, sometimes it's not about the rate. It's more important to increase the cash flow. It's really the goal with refis.
Exactly. And it's a big part. Obviously, we're finding there's some great opportunities. Some clients, 2-3 years ago, interest rates were around 3.74, 3.89. If we can get you down to, variable rates are incredible right now, below 3, some savings there for, even the next 2-3 years could be $10,000-$12,000. So, I mean, there is some definite interest to be put in your hands. And at the same time, being able to free up that cash flow and just to optimize everything, right? There's nothing wrong to have someone take a look and just see, like, is there anything that we could be doing better? Worst case scenario, you simply say, no, you're doing everything great. Okay, good. At least you know that, right? But there's no negative to find out, how much your breakage and what could be done. At least, information gathering is what we call it.
Absolutely. Now that we're on the topic of variable and fixed, again, common question. I know there's no ideal scenario, but maybe if you could just give us some examples of, when it makes sense to go variable and when it makes sense to lock it in for 5 years at a fixed rate. What's your advice?
Yeah, I mean, it's pretty common question. People are saying, James, we've been expecting a recession for the last like year and a half, 2 years, and we've been putting most clients into a variable for this reason, with that intent that something like this would happen. And now that it's gone down, a lot of clients are saying, well, should I lock in now? I want you to take your head and pretend like you're watching a tennis match and just do this. The answer is do not lock in at all. We've got some clients that are prime -1 that are at 1.45% as a variable rate. Do not lock in. Just go pour yourself a beer and celebrate. You're killing it. So, the question right now, should I go fixed or should I go variable? I mean, it's hard to give that blanket, that spread like you just said. Long and short, go variable.
So the other thing people keep asking all the time, it's like, yeah, interest rates are really low right now. Fixed aren't obviously as low as the variables, but when do you expect rates to start rising again? Because obviously history has shown us that during hard times and uncertainty, banks will, start to raise the rates to kind of prepare themselves for what's ahead. Where do you see things going?
The hard part to answer that question is to know the answer is going to need to know kind of when this is going to end to see the exact impact that's going to have. We're not, really near the end right now. And I can already tell you that, from an economic standpoint, this is, it's bigger than the collapse we had in 2007. So how long do I think? Probably like 2 to 4 years. Prime was going to stay really low. It's going to take a long time for us to get back from this. So in the interim, ride the variable train. It's going to be a pretty good long ride.
Good. I would agree with that for sure. Now the magic question everyone's having is deferral mortgage payments.
Right.
And the big question is how does it exactly work? There's this misconception out there that it's kind of like walking into a Kia dealership and skip your first 3 months payments. It's not exactly like that in the mortgage world, is it?
No, it's not. And yeah, it's not. No. So what it is, I mean, they're basically giving you a loan. All right. So let's pretend you're going to skip the next 6 payments and it's $10,000. They're basically giving you a loan for $10,000 to cover those next payments. Like any loan that when you're borrowing money, there's interest on that. Okay. So you are going to be getting a loan, which will have interest to pay your mortgage interest. All right. Now, there's been a lot of people in the news being like, how dare the banks make money onto that? You're borrowing money. Of course, they're going to, like, there's bond yields. There's costs to banks to borrow money as well. So is it going to be a ton of extra interest? No, not really. If you can get away with not doing a deferral, if you have a secure line of credit, for example, on your house, I implore you to use that before doing a deferral. Most all banks, including B lenders, are doing deferrals. Credit unions don't operate under the Bank Act, and a few of them have only been offering 2 deferrals. I've also confirmed from Equifax that it is not to impact your credit as well. There's been a lot of concern around that it will report as a late. If you're doing a loan to make the payment amount, your payment is not in arrears. So you will not have a late payment showing on your credit bureau. A lot of people have big concerns around that.
Okay. Well, that was going to be my next question. That comes up all the time is the whole credit score thing, but you hit it right out of the bat. I just want to jump gears a little bit. And this is the next couple of questions are related to a lot of my investor clients. Recently, Scotiabank announced that they're not going to be allowing home, pretty much credit as a down payment for investment properties.
Yeah.
First off, is that true?
Yes.
From what you've seen, and are other banks going to be following suit if they haven't already?
Excuse me. Yeah, I mean, it's just all part of risk mitigation, right? So, when you're borrowing money from a line of credit which has no amortization, right? It could survive and sustain indefinitely. It's leverage to get leverage. Now, the funny part is we have a workaround around that. A little rule bending, if you will. I'm trepidatious to put it into a video because Scotia might, call me up and yell at me. But if you have home equity in your home, there are ways I can still use that for down payment sources. Other lenders are still allowing the line of credit. There's all these hypotheses around that, that other lenders will start taking that away. And it's very much possible. It's also technically true that at any time your lender can remove your limit of your line of credit. Just like that. They can just send an email and your limit's gone. So, there's a lot of these hypotheses, a lot of fear factors going on, and just take a breath. We still do very much have workarounds to use your equity and still qualify, and at great rates, like best rates.
Again, for some of the investor clients that will be watching this and that I've been speaking to, with their stress and worries regarding their rental properties right now, are those mortgages being allowed to take deferral payment options?
Yeah, there's no like hard yes or no on deferrals. It's on a case by case basis. So, if you're speaking with your lender and you've got, say you're with Scotia and you've got a mortgage on your primary house with a $100,000 line of credit, and you've got a mortgage on your rental, and you ask for a deferral, and you got 100 grand available, they're going to say hard no. So they're looking at it case by case to say, how is your income affected? Are you still earning on that side? How many people are not able to pay rent? How long does it look like they'll have it? What's your other assets that you have? TFSAs, cash, checking, savings, like all that type of stuff. So it all goes into play under that. And I've got several rental properties myself, and I'm happy that most of my payments reaching out. And a lot of investors right now are basically redoing a kind of a lease signing and saying, okay, for your rent's usually $2,000 for the next 6 months, we'll make $1,200, and then the 6 months after that, we'll just to add that back on. If they're not even able or willing to do that, even if you can't technically evict them right now because of the government influence. So I would still issue the what's called N14 or N4, and just so that you're in line. If that does have to come to be the case, and just explain them like, this is why I'm gonna be doing it. Obviously, you won't be evicted, but this is where we're going, and just having that kind of communication. But the other thing I'll say is, for people trying to get a hold of their lenders and trying to be on the phone for feels like forever, most banks and lenders have a special site dedicated to the COVID response. Most of them are asking to do it by email instead of by phone because it's faster for them to process and prioritize. So reach out to myself. I'm happy to share. Most all lenders have that. The other way is, if the lender has a Facebook page, writing it, if your payment's the next like 3-4 days, shoot them a direct message to their Facebook page and let them know that you sent in the email application. It's coming up real soon. They will actually expedite it that way to make sure that your payment gets deferred to one of the top of the list. So just a couple little tricks that we picked up through the process, and hopefully it helped you if needed.
That's fantastic advice. Most people think that it's always about the phone and that's the only way to get through. So, that's definitely great advice. And again, another common questions I get all the time, and you've touched a little bit more on it, but maybe explore some of the options is, for that first time investor, novice investor out there that has a rental property and, owns a duplex, and sure enough, both units aren't paying rent, and things are tight on their end. What options or what steps should they be taking right now?
I mean, proactive is always the name of the game, right? If anything, for your rental, for your primary, for whatever it's going to be, it's just like, it's why I brush my teeth. I could just wait until my teeth rot and go to the dentist, but I'd probably rather just brush my teeth. A little bit easier. So getting in communication with your clients and then being in communication with your bank or your broker, just start planning those earlier than waiting until the kind of last minute. Deferrals, like I said, most, whether it's rental, primary home, or anything like that, they're available, and just speak with your bank to explain that. And if you still can't get service or solution or resolution that way, we still have lots of lending options, outside your major mortgage that way, because deferral is just your mortgage, right? You still got food and taxes, insurance, and all those, car payments and everything like that, which you can't defer. So for a lot of clients, they're saying to us like, 20 grand would go a long way for me right now, with everything that's going on. And it's really hard because some of our clients, unfortunately, are, they're battling and they're fighting and succeeding in the COVID nature. So not only is in this case, my friend's, her husband, he's not working and making income, but now she can't work either because she's, trying to go to the hospital and paying for, finally they've updated to remove the cost of parking, but, paying for a TV and on all those extra things. So, it doesn't just take the one, it can take two. So if that's the case and you're finding that, we can oftentimes get $10,000, $20,000 for our clients in a matter of about 48 hours.
Wow.
And it gets to get directly deposited to your bank account. So, and we're not talking about, loan shark rates where we're going to take your kids and your right arm. are coming in at actually, you know, rates at like 4.99 to 6.99% with pretty minimal fees. You know, a lot of our lenders have been really generous to work with us to help, and I'm really proud that they've made that choice. And you know, before you do a cash advance from your Visa, you know, at 29.99%, you know, please just explore your options, like information gather, because it can really help you a long way. And just, you know, doing those types of things and being proactive as opposed to bouncing a mortgage payment and destroying your credit, you know, that can have really long-term impacts and really cost you a lot more interest. So, you know, it's free. Give a call, just find out your information in advance and just be proactive.
Totally agree. You know, most people kind of wait till they're really in trouble, you know, before
Yeah,
before reaching out. And I agree with you what you're saying wholeheartedly. You know what? Before you get into trouble, make the phone calls, get the information, and explore your options so that you know where to go. You know.
yeah. And
Um,
listen, like, people, I get your trepidation because you don't want to sound like an idiot to ask a question, but there are no dumb questions. I work with a lot of amazing clients, and I have no idea how to do their jobs, and I don't expect that they know how to do ours. And I'm never going to shame people. You know, we're in this together, and it's just it's about gathering information and making sure you're doing what's right for you. And it's never going to be harmful or hurtful just to ask, right? So, you know that there's never going to be judgment, and there's never should be, and it's, you know, it's coming from a place of help. So, you know, swallow your pride, know that you're not going to be shamed, and there are people out there willing to happily help that can do good things for you.
Absolutely, absolutely. I mean, to sum things up, obviously you've shared some great knowledge and insights. If you could just give people two pieces of advice during this pandemic right now that are biting their nails, you know, looking at their account balances, looking at their bills, what would be two pieces of advice you would give to everyone right now?
Yeah. Number one, like I say, you know, reach out, even if you're doing okay right now, to take a look and speak with a professional to review, you know, where could this go and how much do we have, and helping budget and looking at what options could be right now, right? So even if you have a job right now, but there's concern that you might be losing or having issues, you know, there's things that can be done as far as refinancing or secure lines of credit or accessing home equity, you know, to be preventative and proactive. And then the second step is, if you're freaking out and thinking you're going to sell and all those things, my one advice or action is to not do anything, right? The hardest part is trying to time the market. You can't do it. It's not timing the market, it's time in the market. So house prices might go up, they might go down. You haven't lost anything until you sell. So, you know, when we look back at 2007 and 8, that was worse than the Great Depression. And in Canada, that hit us around like August, where house prices were back up pre-August,
Yeah,
4 months later.
remember that.
So, you know, keep that in mind. We've got a really strong economy in Canada. We're one of the first, you know, we're one of the first countries to come out and post a positive GDP. So, you know, we'll get through this. It's not going to be that long. House prices will continue to go up. You know, I just encourage you to not run out and sell your house and freak out into that regard, and just speak to a professional that can address any concerns you might have right now, and just stay calm. Pour yourself a beer and maybe do a Zoom with one of your friends instead of stressing it.
Absolutely, that's fantastic. At the end of the video, we will put our contact information if you want to reach out to us. But James, what's the best way to get a hold of you if people have further questions?
Yeah, I mean, Google us, Loan Group. You know, we've got chats on our Facebook page. We're on Instagram. You can call our offices, email us, whatever way is best for you to get out. We try to work with our clients as to how they prefer it, whether it be texting or emailing or calling. You can submit your application securely online in minutes. You know, so whatever you feel comfortable with, we'll happily work with you on that medium to answer any questions and help you as best we can.
Awesome, man. Appreciate it. And thanks for taking the time to answer all these questions for us.
My pleasure, Mike. Keep up the great work, brother.
Awesome.